Yo, what's good, guys? Here with the weekend video. Watch this whole thing through. It's one of my more important videos. We're gonna keep the intro short and hop right into the charts. So for today, I have a list of stuff that we're gonna go over. We're gonna take a look at the morning star candle pattern that I was looking at last video and that failed, and we're gonna take a look at the weekly chart, head and shoulders, some other technicals. Also, we're going to take a look at the VIX and the 10-year yield. So, yeah, this is a big video. You're not going to want to miss this one. We have a big week coming up next week with a Federal Reserve meeting, FOMC. It could send us sky high into free fall, parabolic drop. So, watch this whole video. This is a big one. You're going to get some info no one else is talking about. So, we're going to start out with that morning star reversal we were looking at. I mentioned how we want a confirmation of closing above the high of this candle, which was around 4:30. That didn't happen. You had Apple and Amazon report with some lower guidance, which overall just gives a bad outlook for the general markets. And yeah, unfortunately, we kept going lower because of that. So you can see we actually attempted a morning star reversal before. That was right here. You had that doji, you had this candle, and we failed to close above it. We closed right under it, and then you had this move up. I wouldn't be surprised if there's a gap up. Maybe no gap, but yeah, gap up, exhaustion gap. I don't know, kind of cool to see that just kind of works out like that, exhaustion gap. So that move failed, and we failed that same pattern again, and we kept going low. So we're in an interesting spot here because we're at some huge support levels on a lot of time frames. You have the Nasdaq made a new low. Just a lot of uncertainty. A lot of volatility. You have that negative gamma really high, which is making that volatility go crazy in both directions. So I'm going to show you some trend lines I found that are pretty solid. There's significant resistances and support. So yeah, we're going to look at that right now, and then after that we'll look at the weekly charts, and yeah, we'll just go step by step. So let's see. So I found this I was really looking at because we're getting into this really tight area where a lot of energy is being built up right here. You can see we get under this trend line sometimes, and I mean, you look what happens after. We fly up, and that doesn't necessarily mean we're gonna fly up. I mean, you gotta keep in mind that if we break these important levels right here, we could go into keep free falling. I mean, the sentiment, the fear in the markets right now it's horrible. So I mean, yeah, we could keep going lower. Like in that last video I was mentioning, around 400, the high 390s where those gaps are, and but right here there's a chance we have a massive reversal that would happen, I would assume, very fast. So yeah, I was talking about in that last video right here, if this pattern played out, that morning star, we would be in our X wave and potentially move up to 438, maybe even higher than that. But we didn't get the confirmation candle, so we kept selling off, and we closed pretty low, which we closed lower than we have in a long time. I mean, I'll just take a look. Last time we closed this low was a little less than a year ago, like 11 months. So it's been a while since we've been this low, or closed this low. But yeah, there might still be a little more downside, around 400, high 390s. But in my eyes, it's risky to bet on this downside unless we're really crashing, just because, I mean, we've had 4 straight weeks of red. 1, 2, 3, 4. You had that gravestone doji, which turned into an evening star reversal, where you closed above this low, so the opposite of a morning star reversal basically. But gravestone doji, you had a huge resistance around here that we just couldn't break, and eventually we sold off, getting lower than this low, gave back all those gains we made from that huge squeeze from like 410 to 415 to 460. So here we are again, same levels, big supports around here, kind of uncharted territory. So it's hard to give levels around here. Like I said in my previous videos, I really didn't know where we would go during tech earnings, because it could go either way. And then right after tech earnings, we have Federal Reserve meeting, FOMC. So pretty interesting. It seems we've been selling off into FOMC, and then right after you have a huge move up, which is in my eyes, I think going into FOMC, everyone's pricing in these rate hikes, and then once they finally give out the news, you know, a little bit of that fear is kind of let off. So it's a tricky area. There's a chance, I mean, you know, it's the market's kind of a rubber band right now, where you know, you're at that max stretching point, but if you stretch any farther, that rubber band snaps, and that might be where we are right now. But the odds are not in favor of that. So you know, we might have a little more green before finally going sub 400, which I've been waiting for a long time. Since November, December, I've been waiting to go back under 400, and we're here finally. We're getting close, but you know, I think there's a chance we get a big bounce, that X wave, like I was mentioning in my previous video. We could have had it and went green into FOMC and then rode out of it, but that didn't happen. So I think chances are we've read into FOMC and then grown out of it. And so a few videos back, I've been aiming for 412. You can go back to that video. I believe it was the 2 SPY videos back. You can go back, and I was talking about 412. Because let me move these lines. I was talking about having this ABC, which in my last video I said this might be the bottom, because you have this Morningstar candle pattern forming, and you just needed that confirmation. You didn't get confirmation, so now we're at that 412 level. I've been watching for a bit, which I got by this, and we're here, and you know, you have this maybe ABC. This could be it. Maybe we have you move all the way down here really fast, which kind of happened back here actually in January. I believe this was Russia-Ukraine news. Yeah, I believe that was the Russia-Ukraine news. I know this is when the war happened. You had that gap down, and then all the hedge funds were waiting. I was watching the news when they were talking about that, and they were saying all the hedge funds were waiting for that gap down. When the news gets announced, and then they would all go long, and I mean that worked out perfectly. Yeah, just something to note. We had this massive move, which we moved down to under the 2.618, which we are at right now for this move, and we went under, but we didn't get to the 3.618. So I mean, let's take a look at the RSI when that happened. See how overextended we were. We were oversold when that happened, and I don't know. Maybe there's a chance we do move down to 400 short term, because you have that RSI, and there's potentially more room to go down. So this is not out of the picture that we go to 400, but it's interesting. Like I said, this is a really tricky area with that negative gamma. All the moves to the upside and downside are accelerated. So yeah, it's just something to note. Maybe we do go to 400, fill those gaps. Right here, you see these gaps. So maybe we head down to the short term. I highly doubt we go into FOMC and then go even more red. I mean, you got to keep that possibility in mind, but the odds are against it. So it's always better to, bet against the low odds. Keep your probability high. So yeah, that's just me talking about that failed Morningstar reversal, and those trend lines you have, where if we get back into this area, like with these candles, you went right back above them. I mean, you're in this really tight area in which all of these lines have been kind of I guess intersecting into, or like converging into a point. So you could have a huge breakout right here. But if we stay below it, maybe 400. But so now we're gonna take a quick look at the weekly chart. And I'm gonna bring these trend lines back up. So this is the first time we've closed below this, which is kind of a big one in my eyes, because you can see we've had big bounces off that trend line in the past, and this time we closed under it. So that's a little scary. I'm not sure what to think about that. Maybe we have a temporary bounce above that line, and yeah, we'll take a look at this pitchfork, which gives a better idea of like levels that you can go when you're in a channel. So we're gonna take a look at that on the XPX, just because I already have it here, pretty much the same thing as SPY. I just have it here, so we're just gonna use this. This is on a logarithmic scale on the daily chart, and what we have here is we're testing the 0.618 of this pitchfork. So maybe we bounce here, you get back to this range. It's pretty interesting how this is all playing out. You have this channel expansion, which we found to be a bottom both of these times. So maybe we go down there, which turns out to be where that gap is at 400 right here. So that's a huge move down, but you got to keep it in the back of your mind. Yeah, this is just something to watch, that pitchfork. You're around all these levels that you can bounce from. The odds that we bounce are increasingly getting higher. We'll pull up the bar counts. Not sure if this will work in the way I want it to. Yeah, we'll just hold that off for now. I don't want to overcomplicate things, but you just at these levels that we can bounce from. There's still that chance for you have a parabolic drop. Just that fear is so high, that rubber band kind of snaps. So yeah, it's hard to say if we're bouncing from here. In my earlier videos, I could really just get those bounces and tops on the dot. You can go and watch through all of them. Pretty much call them down to this, almost to the cent, down to the dollar. Yeah, it's just a tricky area because we're kind of at a breaking point. So we're gonna go back to SPY, and this is something I found, which we gotta keep in the back of our minds too. Possible head and shoulders we have here forming if we bounce from around here. That could just really send this lower. use this. So you have a potential head and shoulders forming, and then once you break that level, just whatever that's down to. So I mean, the odds that we bounce soon they're just getting higher and higher. And you have FOMC coming up, which in the past has always turned out to be a catalyst to kind of reverse the markets temporarily. So I think the biggest thing to note here is that we have hit this level. And I mean, FOMC coming up, I think the odds are pretty solid that we may hold around here. I'm not confident in saying that. It's just that the odds are higher that we do hold around here. And if we free fall, 400 seems to be the area to go to fill that gap. But I'm really looking for this X wave to still happen. You know, you have this here, WXY going down, bigger WXY, something like the WXY, wherever X goes to, and that turns out to look like a head and shoulders, possible head and shoulders. You know, maybe even this is another trend line I was looking at. So I am not measuring from the top. I am measuring from the top of this spot where we gapped through, because in the past you have this gap, just kind of referring back to the past. So instead of measuring out from the top here, which, you know, it took a while to get up to here until we could consider it as a line to trade off of, but if you do it from like here through that gap, you could have played that, traded off that line way sooner, because you broke it. You broke it and you just kept going up until you had this channel expansion, which I pointed out a little earlier. Pitchfork. So right here, this upper boundary, that was the channel expansion. I believe I mentioned it in one of my videos previously where I was talking about a channel expansion, because we broke out of this channel right here, you know, this downwards trend, and we made a higher, not a higher high, but you know, we went higher than like this channel right here, and that was a channel expansion. And where did that come from? This channel expansion of this pitchfork, the 1.5 expansion. So you can see we topped out there, and we also bottomed out there. So kind of cool, just how all of that works. But yeah, just something to keep watching. You know, these levels around here, we're just around all these levels that we can bounce from, and FOMC is likely to give us that bounce. We're just pricing in what they're gonna do with that rate hike coming up. That's why you have all the selling off. People are just anticipating and pricing in these rate hikes, and when that gets announced, I mean, it's already priced in. So like, everyone knows it's gonna happen. Why would you go lower? I mean, maybe they raise it more than everyone expects, but I don't know, it's just likely you bounce from FOMC. So we went over that failed morning star, we looked at the weekly charts, the possible head and shoulders forming, we looked at the pitchfork, we looked at those other technicals, you know, these lines where we might be consolidating into. So maybe we start that X wave soon, and you know, maybe if this is the bottom or we're near a bottom, I mean, you can go pretty high from here. You know, maybe you test this. Let me move some lines off. Maybe you test this trend line. I feel like that honestly might be likely. come up to, who knows how long it'll take. Maybe we don't even test it, but just shown in the past, that seems to be what happens. Just keep it simple. You don't need like all these crazy lines everywhere to see what's gonna happen. Just keep it simple. See where those trend lines with the most reactions are, and you see this right here. One line was really all you needed. Once you broke it, you tested it, bounced off the top of it, got a huge move up. You could have made a lot of money off that move. And then you had the gravestone doji, which was your signal for a reversal. Gravestone doji on the weekly, on the 1 day, the lower time frames. You had that exhaustion gap, so could have played that break, played that exhaustion gap at the top. I also, on this move down, I called for this bounce to 446 and a top at 450. We topped at 450.01. So you just got to keep it simple. Play these technicals, and it just gets easier over time. We're going to take a quick look at the 10-year yield. In my previous video, I was talking about how we don't want to see over 3%. Right now we're at 2.94%. Still moving up a little. You have that inverted correlation where the yield's going up and stocks are going down. And that's what's been happening. 10-year yield's been going up. Equity markets have been going down. So there's a lot of factors playing out right now. You have the VIX approaching big levels. Potentially this cools off for a little bit. But it's at massive levels right here. I mean, if this breaks, that could signal spies like, kind of a parabolic drop, a flash crash, presumably to 400 area, a little under 400, and fill those gaps. But I'm okay if I'm wrong on this one. The odds are really in my favor with this move. That we have an X wave soon on FOMC, which I've charted out in my previous videos. We bottomed out here, and one of the reasons I think that is because we're at one of these first levels around here. You have a strong support around here. There's just a lot of signals, and you get that X wave where you retrace this move. And if you've been noticing, I haven't really been giving out targets, which is the reason being is it's so volatile and unpredictable, so I'm just giving these ranges. You could see a big move up. You have negative gamma, all that short gamma, which can fuel this run, which you already saw here, and you failed that candlestick reversal pattern, and you kept selling off. That negative gamma, just accelerated that move down. So maybe you have another one of these moves and you break these levels. You get that 4-week downtrend broken, relief bounce with that X wave, which WX, we can still be targeting 436 at the 50%. You have that gap at 438, and then you finally have your final move down, fill those gaps under 400. I marked out those areas in my previous videos. There's just a lot of areas around here. Fib levels under 480, mid 480, around 385. We're in a huge, very strong bearish development right now, and there's a lot to take in here. And I just saw this now. Maybe we get a rejection at this trend line right here. So you have a move up to here, which is, that area I've been looking at, 436, 438, that area. But if you break this level, it's going to get nasty. You're looking at 400, a little under 400. So, yeah, I went over a lot of pretty important stuff. There's a chance we get that bounce soon. I think the odds are in favor of that, but with the sentiment, how much fear there is in the markets that we don't bounce, you can still see that free fall. So, really, I'm just not really giving any targets. Just kind of watching these areas. We're gonna want to see bounces from. I'll put it up on SPY. Did I delete it? Yeah, I deleted it. I'll put it back up. So you can see how you put on a pitchfork. So I'm just looking at kind of like the center line of these big moves. So you just around these very big levels here. Big supports, strong supports, psychological supports. Yeah, I don't know. You got to be watching this closely, I guess. Really want to be watching for a reversal into FOMC, which I think is pretty likely in my opinion. Just based on the past from what I've seen. So, yeah, that's gonna be it for this video. Really hope you watch this whole thing through. There's a lot to take in, a lot to learn from that video too. Yeah, I mean, just be ready for some big moves into FOMC. Yeah, that's it for this video. Peace out, guys.